Global Crisis 2020 and Covid-19, the virus that brought our world to halt. A double shock for the world's economy from both the supply and demand sides. Governments around the world are pumping money into their economies to fight the economic effects of virus shutdowns. On top of that, crude oil has dropped to 2003, Brent dropped to $27.94, the commodity facing a perfect storm of demand destruction and oversupply. Central banks applying monetary policy have reached the limits of what they can do as far as interest rates are concerned. Monetary policy by the US providing liquidity to the system by QE in unlimited quantities. The US Fed cut interest rates by 1.27 to 0.27% and bonds buyback unlimited. A very powerful policy. The German Bund is not proving a haven from the selling, with the yield of the 10-year Bund rising 25 basis points. The 10-year Treasury yield hits 1.2% before coming down to 0.8%. Fiscal policies are the core of measures to keep the economy engine going. For investors, the worries about the virus are coupled with concerns over what the mammoth spending plans from governments will mean for the market. Sustained recovery cannot be reached until there is evidence of a slowdown in new coronavirus cases and decreasing trend of fatalities. European and other central banks lagging behind in coordination of actions. Discussions about possibly issuing something that could look like Eurobonds, as German Chancellor Angela Merkel doesn't say no to the idea, a major breakthrough. Surging US dollar is the next big headache for the world economy. Equity markets in historic high volatility. Market rallies continue following sharp declines to 2008 levels. Buying the dips, to a certain extent, gains support. The travel and tourism industries are among the sectors to suffer most in the upcoming months. More details. Monetary policy. The US. Beyond interest rates, it provides an unlimited amount of liquidity to the system. 1. The QE, quantitative easing, not limited to Treasury bonds, but extending to any other credit or debt instruments that the Fed can buy and supply with the necessary liquidity. Opening the facility of commercial paper, example for short-term lending, it can provide all the lending in the world, so it counts daily with a 1 trillion facility. 2. The lowering of the interest rates, which is already done, negative yields on the short-term paper. Europe, a quantitative easing of $750 billion from ECB and $250 billion from the UK. In total from Europe about $1 trillion, also for monetary liquidity and monetary easing to the banking system. The present shock is not similar to the 2008 systemic shock. It is a temporary abrupt supply and demand shock. The supply shock was over in China a month ago. We're now faced with an aggregate demand shock. There is no demand, and it is going to last until July, August. Consequently, the evaluation of the markets is very low. We do not know how deep the recession is and how long it is going to last. Is it going to be a V, W, or U-shaped recovery? Too early to call its name. Fiscal policy. The fiscal policy right now is the one to make not the turnaround, but to stop going lower. It gives actual money directly to the people, helicopter money. Through the stimulus program, Trump asked Congress to approve, example, $2 to $4 trillion, that is 5% of GDP, to be given out. Latest. Deals struck on US stimulus, Germany opens its hubs and markets act to rally. Eurozone discretionary stimulus around 2.2% GDP, but automatic stabilizers and liquidity support will also help. The stimulus package is set to unleash more than $2 trillion in spending and tax breaks to bolster the US economy and fund the effort to combat the coronavirus outbreak, has 4 pillars. $500 billion in loan guarantees, $350 billion to aid small businesses, direct payments of $1,200 to people were not high earners plus $500 per kid. Unemployment benefit increase. Nobody can be sent home without being paid. Whoever gets government support or credit cannot fire workers, and if they don't fire them and keep them for 2 months, then all the credit is given away. No need to turn it back. Strategy. Preferred, wait and see. Liquidity, over 40%. Equities, selective positions in low volatility periods. Preferred US over European equities.